Episode of Finance Agents Live. This is episode number 107, the one where Rhoda kills me for no apparent reason.
Don't even have a joke. You can't even spring these on me, and I don't even know what to say.
Well, okay, we're here. So today we're going to do a current deal talk. So if you are thinking about becoming a finance agent or you're already in the industry, you know that we come across new, interesting stuff all the time. It's kind of one of the things that I like about this job is that you never know what you're going to come across. So today we put together some current scenarios, deals that we're working on in one step or another. We're just going to kind of go over them. If you're watching this and you have a funding scenario you want us to talk about, put it into the comments and we will discuss what we think about it, whatever that's worth for you. Here we go, all right? So we're going to do this right now. So today's scenarios, let's talk shop. Rhoda, how long did you spend prepping for these deals?
Well, the deals themselves, Tim, I've been working on for
years.
A while, sometimes.
Maybe not years.
A couple months.
What's the longest you typically work on a deal? Just on average, what do you think?
It's really hard to say because I work on very fast deals, cash advances, where it's maybe a week, or an SBA for a year. So just different deals require different amounts of time and different finessing.
Okay, so the big range, right? Same here. We have some things you come through, you look at them, no, get out of here, right? I try to cut off things that are impossible right away just to save my time. Because when you get into something, you could be working on it for 6 months, really. You could end up investing a lot of time in something that doesn't work, so it's good to not waste time on stuff that is not going anywhere. Today we're going to talk about some of the more interesting deals, I think, that are happening right now, and anything else that might come up. We're going to talk about a pot farm that's looking to refinance. We're going to talk about a check cashing company, and that sounds really difficult to finance, any kind of a check cashing company. We'll talk about that a little bit. We got a client looking for an MCA Refinance. That's a merchant cash advance or revenue-based advance refinance where they have multiple, trying to make it into one or something like that. I don't know. We have a client with a duplex in New Jersey that we funded and just purchased. We now own the property, so I thought that'd be an interesting update for you.
That doesn't sound like it's going well if you...
It seems like it's going fine to me. And then the last one, we're talking about a medical services organization seeking an SBA loan. I think it was an SBA loan. I think they were looking for any kind of financing whatsoever. What's interesting about that is it's a situation where we had some people who are not doctors trying to own a medical office. And whether or not you could do that, it's an interesting process that we've gone through to kind of learn to see whether or not you can or cannot do that. So let's jump into this. But again, if you are watching this and you have an interesting scenario, throw it in there. We'd love to talk about it as well. But let's start off with the pot farm.
Cool.
Rhoda?
Where is it, Tim? Where's the pot farm?
The pot farm. And now, first of all, let me just say something. We talked a while back. I had somebody on the show, and we talked about medical marijuana and marijuana financing. And I had a few people that got angry at me and said they're never going to watch the show anymore or work with us again because of pot. So I get it. Marijuana is something that people disagree about, right? It's legal some places. It's illegal everywhere federally. Some states it's legal. Some states it's legal for medicinal. For California now it's for everythher and I'm not passing a valid judgment on whether or not it's right or wrong. That
Tim's high right now.
No, whether or not somebody should be able to smoke pot. But when somebody comes to us with a farm, we don't look at it as a pot scenario. We look at it as a real estate scenario. So that's what this is. This is a client who has a farm.
Where?
In Humboldt, California. That is known as the Emerald Triangle. I think it's like the weed capital of the United States. And it's in Northern California, north of San Francisco.
Wow, really north.
Yep.
Really high.
Yeah, okay. All right, we're doing the pot jokes today, apparently. So Northern California, it's a current active marijuana farm. And my first thought when I was kind of looking at this thing is that here we've got a client who is having trouble paying their mortgage on this marijuana farm. But everybody who talks about the marijuana business, they all just talk about how lucrative it is. And it just makes me wonder, is it really lucrative? Right?
Well, if it's at the bottom of the supply chain or value chain, maybe the value gets as you start extracting the oil and not on the raw product. Are they not producing enough?
I don't know. I don't know anything about how to run a weed farm or what you need to do to be successful. Everybody tells me these guys are rolling in money. Maybe it's not the case. A little bit off topic, but I could imagine the smaller farmers are going to get squeezed out as big farmers come in, and it turns into a big industry. I could see that happening. But anyway, that's what it is. We've got a farm.
How many acres is it?
I don't know, man. I have no idea on the acres. I know they have 80 acres on there that's full of timber that has nothing to do with weed farming. And they said that if they needed to, they could log the timber and pay off the loan.
That sounds like it'd take a while.
Honestly, I have no idea. 80 acres, I bet you could probably clear cut that thing in like a week, but maybe they just don't want to. I don't know if you're allowed to just clear cut anytime you want up in Humboldt, California. Anyway, this is the farm, and they're looking to get a refinance.
So how much do they owe?
Let's see. The loan was around $410, but they're currently in default, so they need something like $465,000 in order to be able to pay off the loan with the prior lender.
So, and the current value, did you get an appraisal on that?
We did get an appraisal. It appraised at $915,000. We talked to a real estate agent that was trying to sell it, and she said she could sell it pretty quickly for $850,000. So, if you watched our lending, that you know typically how we would make an offer on something like this is you get about half of the value of the property. So you think we should base that on the appraised value or what the realtor said?
Well, I think the realtor, but I also thought that for land you stayed closer between 10 to 30% and you didn't actually go up to a full 50. Why are you so confident in this deal going up to 50%?
Well, I really haven't said what I'm doing, so I don't know that you think I'm
You
confident.
did. You said the 400,000.
I said
that was the offer. Was
no? I
it was
said
worth
that's
like
what their
$850.
current loan is. Their current loan that they had was like $410,000, and now it's in default, and they need $465,000 to pay it off.
So if you're looking at it, though, let's assume you're going to do, you were first position lender, though, right? And so you're going to do the full 460, maybe, or no?
I don't know. You know, there's that when you come in and look at this, the first thought most people have is, yeah, just pay off the whole thing. But, you know, it's not unreasonable to require the borrower to put some cash in. So if they need $465 to pay this off, there's going to be loan closing costs and other things. You might offer a loan at $420, pun intended, where the client would have to come in and put down 40 or 50 grand in order to make it go through. So you don't have to do a loan for the entire thing. This client is already in the foreclosure process. In California, foreclosure work goes pretty quickly. So they're going to potentially lose this farm in 90 to 120 days in its current situation. So it's not unreasonable to ask them to put some cash in order to make it a deal.
If they're in default, do you think they have cash to put in?
They might.
Okay.
Right? You know, sometimes people find money. I don't know. But you know, one of the things you said is it's got a lot of land. It does have a lot of land to it. I don't know that the value is necessarily in the land itself. It does have a farm. It does have a home. Good question, though. I don't know if the value is in the actual weed business itself. There are permits that you have to have in order to have a weed business. You can have that be a part of the loan where if they default, they get transferred. So we are actually putting out an offer on this one, but it's a pretty rough offer, honestly.
What's your LTV on it?
The offer is surprisingly for more than it's a $500,000 offer.
Oh.
But there's a lot of fees in it, and it's only 6 months. It's to get somebody, you know, out of this current lender. Here's one of the things with marijuana. Nobody's going to go to Chase or Bank of America and get a loan for a marijuana farm. Not going to happen. So this person is with another private lender who's trying to get the farm right now. So it's a fairly large offer, but with a lot of fees in there and an exit fee. It's a short time frame. It's 18% interest because the only investors that we could talk to that were interested in this demanded it to be really aggressive or they're not in it. And be honest, even at these rates, at an 18% interest with tons of fees in there, I'm not sure we're going to be able to get the deal done. This deal has already fallen out at title 3 different times.
Why?
Great question. You know?
Thanks.
And you don't always know. Most likely, 3 different lenders went and then decided to back out. Whether or not they backed out right away or at the last second. What you know is this person doesn't have any other options. So even though this one investor we're working with has some pretty rough rates, they may be willing to accept it just because this is probably their only option other than just, you know, they've already tried to sell the farm a few times, but they've been trying to sell it they tried to sell it at $2 million, $1.5 million, $1.25 million. Maybe they'll actually turn around and sell it at the price that it's worth. But that's it. So that's where we're at right now. We put out an offer, probably one of the toughest offers I've ever put out, and then we're waiting to see if the client's going to come back and accept it.
Great.
You love it?
Sounds like it's a little high LTV for my blood, but that'd be great.
It is, depending on how you look at it, right?
And pot farm, I don't know. Agriculture, is it designated agriculture? I don't know. It seems very high.
I don't know if it's designated agriculture. That's a great question. I mean, it is a farm, but is marijuana protected? I don't know. It's about half an hour from the coast, Northern California, so even if you didn't have it as a farm, it could be a nice place to have a vacation home.
Maybe if you style the plants, it could be horticulture. You never know.
Yeah.
You could throw it in there.
Yeah, well, it's owned by a company that says there's marijuana in the name, so there's no hiding that from the big lenders. If you're going to go get like a mortgage, they're going to know. The borrower's credit is pretty rough. I won't say exactly what it is, but it's down there. So they're not going to go to a conforming lender for sure. The only reason somebody's going to invest in this is, I know you said the LTV may be high, but I think you've got people that are looking to say, I can maybe pick up this farm that's worth somewhere between $850,000 and $1 million for a $500,000 loan. I think they're looking at the possibility that they're going to get the farm for $500,000. And if you look at it that way, it's not so crazy an offer. All right, so that is the first one. All right, the second one is one of yours, Rhoda.
Yep, mine.
A check cashing company. And before we say anything, honestly, I didn't think it was even possible to fund a check cashing company. So why don't you tell us about this scenario?
Tim has little faith in me after all these
years. It's nothing to do with you. It's check cashing. It's like a finance company.
Yeah, it was tricky. We went to a few different lenders, and the space is sort of opening up because lenders are getting more aggressive because of all of the competition. And so I was willing to try and work this one. Also, the revenues were extremely high. I think they were doing $500,000 a month. Can you go to that slide?
Yeah, $500,000. So
This
first of all,
one,
what is
not this one, the next one.
What is the actual scenario? So you got a check cashing company, and what did they want?
They wanted, excuse my typo for monthly, they wanted money to buy out one of their partners, and they were looking for, I think, $1 million.
All right, so how many partners were there?
Detail that I don't remember. 2 or 3. And
Two or three partners, and they're doing $500,000 a month in revenue. Mm-hmm. So is that revenue? They're putting out money. They're buying people's checks. How does that business even work? Do you know? Check cashing company? How do they make money on cashing a check?
I think you get an advance on your check, and then they cash it for you, or there are different models. If you have a paycheck, and then you can bring in that stub, and they give you an advance on your paycheck. I didn't really get too much into the business model of how they generate revenue.
But they're netting $500,000 a month.
That is correct.
That's a lot. That's awesome.
It is. They have different accounts, and so there's one where they have the deposits from who said check company, or the client's deposit. That goes into another account, and then this is the actual revenue from the company.
All right, so you got a couple partners. They want to buy one out. The buyout's $1 million. Partner says, I'll walk away, give me $1 million. So they're bringing in $500,000 a month. Why don't they just wait 2 months? Right?
Well, you have costs or no?
No, that's what I was saying. So net or gross revenue? Gross revenue before costs was
These are deposits. These are deposits.
Monthly deposits
gross.
of around $500,000.
Right.
Okay, great.
Right.
All right, so what are we looking at? You got a chart here. Monthly.
So these are when I review files, is I put in their monthly deposits. It's 3 or 4 months, and I look and I can see what the average is over the time, and then I can look at the trend and see if it's trending up or trending down, and also look at the volatility. The volatility on this one looks like there is some, but when you look at the slope percentage, it's only about 11%, which is fine.
Slope percentage. We're getting some fancy linear.
Well, when you look at that linear slope, I think that between the high and the low, it's maybe 11% or 13%, something like that. And it looks like they're losing about $16,000 a month. Again, it's a short time, so
the
that's
business
not
is currently losing money.
That's what these 4 months. Obviously, you get a bigger snapshot, a better snapshot if you look at a 12-month bank statement or something like that, and that's why sometimes lenders will ask for that, particularly if it's a seasonal business, and then you can see hopefully the volatility would even out. But this one, just for the 4 months, they're losing a little bit. But again, you can see it's high and then low, and now it looks like it may be going back up.
So in your experience, 11% is not that much.
No, people will get a decline if there's like a 50% drop or something like that. That's not great. It will pull back on the offer if it's over 15 or 20%. So those are some of the things that I like to look at for the stats for the file.
Okay, great. All right, so...
yeah, don't show that one. That one's boring.
Don't show it, all right. Okay. Well, Darren doesn't show. He shows whatever he wants anyway. All right, so that was... So they're bringing in $500,000 a month. And what type of financing did you try? We're talking about merchant cash advance or revenue-based advance.
Right.
That's the type of financing you're trying to do.
Correct.
Is it still active, or did it get declined?
Well, so we got $250,000 offer. That was the max offer that for my desk, the programs that I work, we could do because of the risky industry and it being in finance and lending.
You got a $250,000 offer for revenue advance for a check cashing company. That's pretty darn good.
Well, except for they wanted $1 million, so it wasn't even halfway there. So we tried to structure that we could do a down payment, and then as you get the renewals, keep giving the renewals, and then you would get the maybe pay the $1 million over a year or two. But the partner buyout didn't like that option, and so unfortunately this one hasn't funded yet.
I told Andy the way she'd do it is you take the initial money, give it to him, and just do a buyout and not do successive RBAs, because that would make it... They'd be able to pay the guy more money if they weren't paying back all the RBAs. That's my input. Okay, so right now that's stalled. We're just waiting to see if the client accepts it. Do you think they are going to be able to get something better somewhere else?
I think he has a hedge fund or something looking at this one. I don't work with those, so I can't really speak to it, but they're working on it. Don't
hedge fund.
Dead.
All right, the old hedge fund. Love when people talking about bringing in the hedge fund. They got all the money. All right. Okay, next, another one of your deals here. We're talking about an MCA refinance. Now, we just talked about an MCA. Remember, MCA means merchant cash advance. These are those daily payment loans. We typically call them revenue-based advances. So, somebody wants to refinance them. Is that an easy or a hard thing to do?
Yeah, I'm not sure the nuance between restructuring and refinance, and they are kind of particular, this company that we work with.
I think refinance would be get a new loan to pay the other ones off.
And you're not doing that.
That's not what we're actually trying to do.
They work with a team of attorneys and processors, and they will contact the cash advance company on your behalf, showing the hardship that the cash advances are posing on you, and negotiate new terms on your behalf. You'll get a new contract restructured. Typically, the term is going to go maybe about twice for what you currently have, and so it'll cut your payments in half. And so it just frees up cash flow. It doesn't actually net you funds.
All right, so let me understand. We got a client that came to us looking for funding, and when we looked at his scenario, we said, you're not getting any more money, buddy. In fact, the best way for you to have more money in your bank account each month is to pay less on your loans because you're in trouble. And we introduced him to a company that helped him negotiate a lower monthly payment by stretching his payments out over a longer period of time and not adding fees. That's basically what you're saying. Does that sound about right?
Yep.
Okay. And did that actually happen? I mean, where are we in the process on this?
So right now we requested contracts today. So the offer was they're currently paying $10,000 in their monthly payments, about $10,500, and then they were able to restructure it so that they will change from their daily payment to a weekly payment.
Yeah, she says $10,000 monthly, but that's really what, $500 a day or $300 a day or something like that, whatever it is.
Right, it's not a monthly payment. That's over the 21 days, business days.
That was like $500 a day. So $500 coming out of his bank account every single day. They're going to stop those. They actually get a new contract with each lender. Mm-hmm. Is that right?
Correct.
Okay. And then the new payments, what are those? You just sent out the proposal today.
Mm-hmm. Well, last week.
Last week?
We
okay.
requested contracts today. He thought about it.
Okay. And what do the new payments look like?
So they have some initial down payments, which are slightly higher to cover their costs. And those are about $1,600, but the client's monthly is going to be for from about closer to about 10,000.
All right, so we're changing it from paying it off in about 4.5 months to 9 months, so you're about doubling the time. This says first 2 payments, $1,693.95. Is that first? Are these monthly payments or weekly payments? What are these?
These are weekly payments.
So for the first 2 weeks in a row, he's going to pay about $1,700 a week. Then after the first 2 weeks, almost $1,300 per week. The client's going to be saving or paying about $5,000. Now, when we say here, it says the client monthly savings is about $5,000 a month.
From that 10,000 we saw earlier.
It's not really savings. It's just less that they have to pay because they're paying over a longer period of time.
Improves your cash flow.
Right. Okay. And that can make a big difference because if you're going underwater and now you got $5,000 less to pay each month, it's a lot easier to pay the bills and turn the business around. So is there a downside to doing this kind of a restructuring?
If you need cash, when cash advance companies see that you're in this program, it's kind of like the block. You can't. And so if people really need cash out, you can't do it. But as far as improving cash flow, I think it's a great option.
Okay, so you can't get more debt, but that's the problem, right? So, but you can reduce your monthly expenses. So if you have a big expense you're trying to finance, that's not going to happen. But guess what? It's not going to happen anyway. You're already in big trouble. Maybe you stop digging the hole deeper and time to start filling it in. So, okay, good. Well, it'd be interesting to see what happens with that. All right, scenario number 4, duplex in New Jersey.
Oh, that sounds interesting. I want a duplex. What's the scoop on this one? How'd you get this one?
All right, well, we had a client that came to us a while back, was looking to get a loan. I may have mentioned this one on the show before. The duplex was appraised at $145,000. Fully leased duplex, 2 tenants in there, paying almost $2,000 a month. Client came to us, was looking to pull cash out of the duplex. Had a lot of weird things around it that made it a really difficult deal to fund. Normally, if you want to get a loan for, $90,000 on a duplex appraised at $145,000, fully leased, that should be a pretty straightforward thing to do. But this one had all sorts of title issues. It had been purchased.
What do you mean when you say title issues? Like what?
Great. Okay. So title has to do with who owns a property, right? Title companies ensure that the person selling the property is the one who actually owns it. So when I say title, I refer to ownership. Okay. So this property had been purchased out of foreclosure a few years ago. The person who had purchased it had used a loan, and then that person had defaulted on their loan. The person had then sold it to somebody else without actually transferring title because the person had been a cash buyer and there had been some arrangement. To be honest, I don't actually understand fully what the arrangement was, but needless to say, it came to us where they had just recorded title like the week before, even though the purchase was supposed to have happened 6 months ago. Most lenders are going to want to see a year's worth of aging to validate the value. They want to see that it's been owned for a while to say, yeah, it's worth $145 versus the $75 it was bought at. There was just a lot of tricky things around it. This loan, we were taking it through. We had an investor, and the investor bailed at the last second, said this is crazy. So at the last second, we had to fund it with our own money. Needless to say, the borrower ended up being what's called a first payment default. Didn't even make their first payment.
That doesn't sound great.
Which, I hear you. You might think that sounds like a horrible deal.
It does.
But then I went to the client and I offered a little bit of cash. It's called cash for keys. I gave a little extra money and got the keys to the property. So now we own the property. Oh. And to be honest, we own the property for around $80,000. It's worth $145,000. To me, that sounds like a great deal.
And you got renters in there.
We have renters, but it's,
Are they paying?
I have no idea. And frankly, it's not important. If they're paying, great. If they're not paying, then we're just going to sell the property. It's worth a lot more than what we bought it for. So it's kind of hard to lose, right? This is what we talk about. If somebody pays on one of our real estate loans, we're happy. And if somebody doesn't pay on one of our real estate loans, we're not unhappy, right? Because we're going to end up selling the property, and the investors, our internal investors, going to end up making more money by taking the property back and selling it than probably they would if they were getting rent or interest income. So what may sound like a bad thing really isn't. We underwrite with the understanding of if they pay, great. If they don't pay, great, right? This is one of those probably going to end up being better that they didn't pay, and we now own the property free and clear. We didn't have to go through foreclosure. Cash for keys is a great structure, if you ask me.
Sounds
Boom,
like a
all
thing
done.
on the radio. I get to cash
Sounds
for
like
keys.
Cash for keys. That's right.
I get contest
what it
on
is.
the radio.
Right. Well, when you're looking at a foreclosure situation, you have two ways to look at it. You can pay money for attorneys to go through a foreclosure process, and it could take a while, right? It's in New Jersey. God knows what's going to happen. It might be quick, or it might take a year, right? Or you could fork over the same money you might have given to the attorneys, and you're in for the exact same investment with zero hassle. You're able to close the sale in a week. So that's exactly what we did. We now own We now own two properties. Within the last 2 weeks, we now own two different properties. Before we only had loans. So
Wow.
It's an interesting scenario. When the whole thing's done, I'll do a wrap up and let you know exactly how it worked for us and for our investors. But right now, I'm feeling optimistic. So that
Great.
is our duplex in Jersey. All right, scenario number 5, MSO SBA. What the heck are all these letters?
Well, Tim, an
Yeah.
SBA is a loan backed by the federal government, and an MSO is a organization, a medical service organization, I believe is the exact acronym. And so how the deal was initially presented to me was non-physicians wanted to buy a medical practice, and typically you can't do that because the only people who can have licenses to run a medical practice is a physician.
I'm not a physician, even though she
But I was
pointed at me.
waiting for you to fill in the blank. I thought that was a gimme.
Yeah, if you're a doctor and you go start a corporation, you start what's called a professional corporation. It's a different type of corporation. You have to be a doctor to own it. So, I heard Rhoda a few weeks ago say, hey, I got this guy. He wants to buy a medical practice, but he's not a doctor, or a group of guys or something. It was a group of people that wanted to do it. You can't do that, right? Excuse me, sorry. And my answer was,
on the show.
I don't know if you definitely can't, but maybe not. Hold on, I'm going to cough, sorry.
So you can't own the practice, and you have to be able to write prescriptions and do things like that as owning a medical practice. But there's another type of structure, and this MSO structure would allow them to operate the billing, the management and work, but they have to have a contract with the physician so that the physician can work independently and they won't interfere with their ability to practice medicine.
Right, you have MSOs and DSOs, dental service organizations as well, do the same structure, and it's a way for non-doctors, non-dentists to own medical and dental practices, but there's a lot of rules around it. We're not going to go into all those rules, but the short thing is you could actually do this. But can you do it to get an SBA? That sounds like a hurdle that might be difficult to get through when you're dealing with a government organization or picky banks.
Right, and so we had to see a copy of the contract that they were going to have the physician signed because this was an existing practice that they were getting ready to purchase. And so, a lot of physicians, it works out well because the physicians don't want to do the billing and the management of the practice. They just want to practice the medicine. So we had to see a copy of the contract that the MSO and the physicians were going to sign. And there were some legalese that the underwriter was looking for, ensuring that the physician would not be precluded from practicing medicine as he thought best fit.
Okay, great. So if you want to go buy a dental practice and you're not a dentist, this is the way to do it. Or a medical practice, I guess.
I don't know if they do
I don't know.
that with veterinary clinics too, probably, a VSO.
Veterinarians? I have no idea. Maybe, but this kind of thing exists because you have these large corporations that are going to own a lot of medical or dental practices, and you can't expect every single person that owns a corporation to be a licensed professional. It's just unnecessary, and frankly, there's no benefit of that. Darren wants to buy a dental practice. Go for it.
No, but I just wanted to point out some people might be confused by MSO SBA. So what is that?
I don't even know if they can see
full
the
term
slides.
stand for?
MSO means Medical Services Organization, and they were applying for an SBA.
Which is?
A Small Business Administration. It's a
Okay.
loan. That's the first thing that Rhoda explained. Is an SBA is a loan. It's a government-backed loan that you get through a bank. This is one of the services that we provide, one of the types of financing.
Because I just want to
that's
throw this
available.
out to anybody who's interested in learning more about this. If you Google MSO SBA, it'll give you both airports for Missoula, Montana to Santa Barbara, California. So just be aware.
Okay,
You might want to
MSO
use the full
SBA
name.
is not a thing that goes together. There's no such thing as an MSO SBA. This is simply the title I put for the slide, so we would know what the heck we're talking about. But yeah, you can fly to Missoula and Santa Barbara.
Yeah.
Also,
I
if
put
you
it in.
want.
I'm like, all right, let's see what's on here, and Oh, hey, it's just a bunch of airports. All right, so let's get the listeners and the viewers what this actually means.
All right.
Excellent. Thank you.
Good to know. I'm sure everybody was confused. All right. Awesome. Okay, so that's it. Those are the 5 deal scenarios we went over today. That was the Pflum Check Cashing Company and MCA Refinance Duplex in Jersey, and the MSO SBA, the infamous MSO SBA.
The Missoula, Montana deal.
All right. Thanks, everybody, for coming on the show. If you want to watch some other shows, go ahead and click through. If you're new to the show, subscribe. Otherwise, we look forward to doing a lot more deals together.
100%.